Welcome to Market Catalyst. I'm Julie Hyman. We are 30 minutes into the U.S. trading day. Here's what we're watching this hour. First up, we'll have more on the AI trade as SoftBank unloads its Nvidia stake and AMD kicks off its Analyst Day. Plus, we'll hone in on the space trade as Rocket Lab delays the debut of its rocket designed to compete with Elon Musk's SpaceX. And in today's Why Behind the High, we'll dig into what is driving Eli Lilly shares to all-time highs. They're there again today. Taking a look at the major averages here, we do have a mixed picture. Right now, the Dow is up about 90 points or so, about a fifth of 1%, but we've got the S&P 500 down about a tenth and the NASDAQ down about a third of 1%. As we know, some cross currents continuing today, or should I say, there's not really one big story that is driving the market. Yesterday, the news that we were getting closer to ending the government shutdown lifted stocks. Today, we're still getting closer to ending the government shutdown, so the tailwind sort of already happened. And then we've got some mixed headlines on the AI front. And speaking of which, let's take a look at the NASDAQ 100 here. You see Nvidia shares trading lower. That's after SoftBank revealed in its earnings report that it had lightened up its holdings of the company, not just eliminated its holdings of Nvidia here. It said it was in order to raise cash to reinvest in other holdings like OpenAI, but the shares are down a little bit. Here's the two-day chart, however. So you see, obviously it's still higher, still over the past 2 days, but down about 2.7% today. And then elsewhere, sort of mixed within large cap tech. Now, as I mentioned, the Dow is outperforming today. So if you equal weight it here and look at what is up, you actually have Nike shares up about 3.5% today, Merck gaining, Salesforce, Apple. So that's why this index is doing better than the NASDAQ. Tech-heavy NASDAQ seeing a little bit more weakness. And then if you look at sectors here within the S&P 500, energy is in the top position here, gaining about 1.4%. But counterbalancing that and then some, obviously, we know tech is a huge weighting within the S&P 500. So the XLK right now down about 2/3 of 1%. Let's dig a little bit more into that tech picture because AMD this afternoon is going to be holding its Analyst Day at the NASDAQ. Attendees will get a look at the company's plans for its AI chips and systems as it tries to grab market share from rival Nvidia. Meanwhile, as we talked about, Nvidia is under pressure. That's weighing on the major averages to a degree, and it comes after SoftBank unloaded its entire stake in the company. Here with me to discuss, Bob O'Donnell, TECHanalysis Research President. And Bob, you're here for that AMD event in part. But definitely we are continuing to get these headlines fast and furious about what's going on with AI writ large. I want to start by asking you about the SoftBank Nvidia headline this morning and what we make of SoftBank's reasoning, that it's just trying to raise some cash here.
Look, I don't think we want to read too much into that, Julie, because I think you're right. I mean, at the end of the day, they have a lot of investments. I mean, they're a big player in ARM, and of course, they want to see ARM play a bigger role with all this AI stuff. They're investing in a lot of other companies as well, as you talked about with OpenAI. So, I mean, SoftBank, Masayoshi Son, he spreads his bets in a lot of different places. So I just see this as them taking an opportunity. Nvidia is very high. They're going to make a bunch of money on it. They can leverage that cash for a whole bunch of different options.
And let's talk about AMD and sort of AI more generally. You have been hot on something you are calling hybrid AI.
Yeah.
First of all, what the heck is hybrid AI?
That's a fair question. So look, the idea, there was back in the day of the cloud. First, there was the public cloud, and then there were companies who did it on their own. That was private cloud, and then there was what was called hybrid cloud, which means it used some of the company's resources and some of the public compute resources. The same thing is happening with AI. So we started out with all this AI in the cloud, OpenAI, all these big companies, and that's still where the vast majority is happening. But increasingly, we're seeing companies start to invest in their own GPUs. So Jensen calls it the enterprise AI factory. We've seen all these other companies. So all your big server companies, your Dells, HPE, Lenovo, Cisco, Supermicro, these companies are building servers again that companies like Coca-Cola and a GM and all these guys are putting into their data centers because it turns out the most precious data that they want to use to train and fine-tune their models is still behind the firewall.
Okay, I want to take I want to sort of break that down a little bit. So when we're talking about the cloud traditionally, what you call the public cloud, we're not talking about public as in government. We're talking about public as in the so-called hyperscalers, the Amazons, the Googles, the Microsofts of the world, where my data is not on my computer. It's not on the server that's in my company's basement.
Right.
It's in their data center server, and that they manage that for me. But what you're talking about is that now maybe it still is some of it on the server in my basement.
Yes.
And that because my company's information, proprietary information, is valuable to train an LLM, that there's a case still to be made for the server in the basement or wherever it is, my own data center.
Yeah, no, exactly. And thank you for explaining it in a more humane way. But yes, at the end of the day, that's what it boils down to. And the thing is, you can start to leverage a combination of these things. Some workloads, you can do some of the work locally, and some of it you can do in the cloud. And they're figuring out ways. There are these technical standards called MCP and A2A for agents to make all this magic work together. And then the final piece of the puzzle actually is we're starting to see some of this stuff move to the edge. And the edge sometimes is the computer.
The computer, the phone, the device.
It could be robotics. It could be factory automation tools, sensors collecting a lot of data. They do some of that AI work there, and then they can transfer some of that to the cloud. So it's that combination of all of those things that's really starting to change the game. And that, in turn, is allowing companies to start to build applications that they can actually leverage AI, as they were just discussing in that last segment, to start to generate revenue. Because right now we're building the hardware infrastructure, that's great, and all the companies selling the picks and shovels are doing great. And now it's about, okay, now let's convert that into real income and real things that matter. And that's where the AMD story is interesting, speaking of their event, which I will be at today, because one of the things AMD talked about last week was the strength of their CPU business. We always focus on GPUs, but at the end of the day, a server still has a CPU, a PC has a CPU, and that's a big part of what drove some of AMD's growth. And of course, yes, they also have GPUs. They are the clear number 2 versus Nvidia. They're seeing strength. A lot of companies, of course, want to see more alternatives from Nvidia. AMD's that obvious choice. So I think we're going to hear a lot about what they're doing on that front today. And, AMD does gaming. AMD does networking. AMD does FPGAs and other specialized chips. Field programmable gate arrays. Sorry, it's semiconductor tech speak. It's a specialized chip that's used for certain types of applications.
Right, okay.
Point is, I think they're going to tell this very broad story about how they're leveraging compute in different ways, and probably some comparisons against Nvidia, because from a spec perspective, they're actually doing pretty well. It's all about getting that software story together. And again, we'll hear more about that today.
Okay, so when you're talking about those different types of clouds, right, there's the publicly managed cloud that the hyperscalers do. NVIDIA's dominant in that. AMD's getting a piece of that. You have the servers, that are owned by companies themselves and managed by them. They're also probably both have a piece of that.
Yes.
The edge part is kind of Qualcomm-ish, is it not?
Yes, absolutely. Qualcomm's got a big role on the edge, and other companies leveraging ARM-based technologies, more industrial companies, Renaissance in the automotive space, and other companies who are doing ARM-based processors as well. Intel still has a place there, right? I mean, there's still a whole bunch of things happening with Intel. But yes, there's much more diversity of of chips being used there, and types of devices, sensor companies that collect that data and then gets analyzed. Some of this goes back to, remember big data? Like 15 years ago, we were all talking about big data was going to change everything. It didn't really happen because we didn't have the capability to analyze that data. A normal human being couldn't do it. With Gen AI, now all of a sudden, all this access to all this data becomes important, because now I can start to go back and actually make sense of this data and get insights into what's going on within my operation. And that becomes a part of this story.
Okay, and then the next phase, as you said, is figuring out what to do with all this stuff. So I feel like right now we're building the roads.
Yes.
We're building a vast, vast network of roads.
Big superhighway.
But we don't really know what the cars look like yet that are going on that roads, which is kind of, if you think about it in that way, it's kind of nuts that we're building this way. We're building all this infrastructure before we know exactly what we're using all of it.
No, it's fair. And look, at the end of the day, what we're seeing now is a couple of very promising examples. People who found an application that really delivers an interesting outcome and changes the way they think about how they can leverage this technology. The problem is it's still very early and it's hard to integrate. And at the end of the day, it's hard to get everybody to change their habits and use these new tools, because a lot of these AI tools, as they get built out, are going to force people who've had certain types of work habits and certain processes to dramatically change them. That's the hardest thing to do. It's the people part, right? It's figuring out, how do I take this technology? How do we make it work? I mean, we were joking right before we came on. Things like call center agents, right? The customer service stuff, all of that stuff, you'd think by now we'd have it all automated and it would be great. We're not even close.
No. Well, okay, so that brings up the most important question, I think, for investors. And it's the one that's been swirling around all of this, which is, when is it going to actually make money, right? And does the profitability, when we're talking about OpenAI, when are they supposed to make money?
It's 2030, whatever.
Like, how does that work?
Yeah, I know. Well, there's clearly a lot of people thinking that they are very important, and therefore, of course, we're going to support them until their vision comes to life. We'll see if the market's willing to accept that or not.
Right, that's the big question.
Yeah, that is absolutely the big question. But I think we're going to start to see some incremental things in 26 and into 27 where, again, you've got some really nice niches of certain software companies who create these solutions that allow people to really be more effective in what they do. We're going to see robotic automation in factories. Some of those areas are going to be driven by AI. Some of these things may not be the sexiest things in the world, but at the end of the day, if they can translate into, again, total cost of ownership reductions, return on investment, your classic numbers, those kinds of things can start to make a difference. And so, and again, pulling it full circle back to what I was talking about with hybrid AI, some of those technologies, I think, start to bring this into focus, because it gets companies thinking about, okay, how do I think about where my data is, how I access my data, the applications I can build from that, and then these individual tools that I start to build. Some of it involves discipline within the organizations. A lot of companies kind of went crazy and they did all these AI projects. Yeah. Now they're like, hold on a second, let's figure this out. What actually works? Let's get these things that actually work, make them work, and then build on them. And again, this is going to take a while for companies to start to do that.
Yeah. We'll be here. All right. Thanks a lot, Bob.
Thank you.
Appreciate it. Good to see you. Coming up, what's behind Eli Lilly's all-time high stock price, plus what's next for the space sector after Rocket Lab earnings. We'll be right back. Eli Lilly shares closed at an all-time high Monday, and they're on track to repeat that feat today. That's after Leerink upgraded the shares to outperform following Lilly's drug pricing deal with the White House. For a deeper dive into the why behind the high, I want to bring in Evan Seigerman, BMO Capital Markets Managing Director of Biopharma Equity Research. He covers the sector closely. Evan, you've got an outperform on this stock, and you've got an $1,100 price target already, so you think it still has some room to go here. The drug pricing deal that we saw with the White House, which is going to give folks who are on Medicare access to some of these obesity drugs. Talk to me about the significance of that.
That's huge, because Medicare has been this enigma for anti-obesity medication. Medicare Part D plans have actually been prohibited from covering drugs like Zepbound and Wegovy, and now we have a path for access. So doing rough math, you have about 68 million Medicare beneficiaries, 81% or so have a Part D plan. And I don't know, half of those or more could be eligible. So we're talking 25, 30 million new patients that could get pretty strong access for these medications. That's a $50 a month copay. That's accessible for a lot more patients than, say, $500 a month.
Yeah, it is accessible for a lot more patients, but still $50 a month is $50 a month, right? It's not a $10 copay. So do we have an idea of how affordable that's going to, the numbers you're citing are big. Do we know how many people are actually going to tap into this? Do we have some sort of indication of demand here?
It's still TBD. I think the demand's going to be pretty high. The reason why I think that is because there is a lot of enthusiasm, as we've talked about on this program. There has been a lot of demand for these products in Medicare, and there's been frustration. When it comes to Medicare Part D, $50 a month is actually kind of in line with out-of-pocket costs and co-payments that beneficiaries have to pay anyways, for other drugs. So it's not, kind of an outlier in terms of cost. But again, what we're going to really need to see is how these patients get into the system. They have to get the drug prescribed. They need to be monitored. So it's not just a light switch that flips come January 1 when the new plans roll over. But we'll see probably a slow grind into 26 and into 27.
And the patients may be paying $50, but that's not what the companies are receiving, right? They'll be receiving still in the multiple hundreds of dollars, just not as high as the initial prices for this. How much does it cost in Eli Lilly to make this stuff, right? What are their margins going to look like under this deal?
So let's just kind of walk through kind of some of the pricing stuff, and then I'll get to the margins. List price of $1,100. We all know that that's not what anyone pays or what the company makes. So in this Medicare deal, I believe the government is getting Zepbound in Wegovy for $245 a month. So they're paying $195 to the system. Lilly doesn't get all of that because there are some kind of, the wholesalers are involved. But in terms of the margins, these are pretty, these are not the cheapest drugs to make. I estimate that, it's probably $30 to $50 a month for the 4 pens. The API and the plastic for all the auto injectors isn't cheap. I mean, they're not the most expensive drugs under the sun, but they are definitely not, as cheap as kind of a generic kind of antibiotic.
So obviously all of this was just the latest boost for Eli Lilly, but it's been on a tear. It's at a record. What are you thinking about in terms of what's going to continue to propel momentum here to get it to an 1100 or, whatever it's going to get to next year potentially?
For sure. Well, what's really interesting when you look at Lilly versus Novo, Lilly had a fantastic 3Q. They beat and raised, and they're firing on all cylinders. And I've said that many, many times before, but we're really seeing a bifurcation between the two companies. I think what's important about Lilly is that they have a wide portfolio in obesity. They have, Zepbound Mounjaro with tirzepatide, orforglipron will be approved potentially by the end of this year. They have a higher efficacy asset called retatrutide. And the reason why I'm highlighting all of these is because they have a breadth. They can address kind of individual patient needs across the spectrum. Whereas Novo is really focused on semaglutide, whether it's Ozempic, Wegovy, CagriSema, the Wegovy in a pill. It's all on semaglutide. So they've kind of not innovated enough beyond just this one great asset. And I also think that Lilly, beyond obesity, has Alzheimer's, inflammatory disease, cancer. So there is some diversification. That's what makes Lilly, that's what's going to drive Lilly's next leg of growth. But I think 2026 is going to be another banner year for the stock.
Evan, who do you think is going to win the pill race?
Great question. So my vote is actually for orforglipron. Even though the weight loss is a little less than what we see with the Wegovy pill, I think what's really key is that the orforglipron does not have an issue called the food effect. So when you take the Wegovy pill, you have to basically take it first thing in the morning because you have to have fasted, 4 ounces of water, and then you got to wait a half hour. You got to do that every day. You don't have that with orforglipron. And I think that's going to be a real hindrance to uptake because in the real world, a busy parent trying to get out of the house, that's insane to do. Orforglipron doesn't have those issues. And if a patient needs higher efficacy, they have tirzepatide.
Right, and that is an Eli Lilly product, we should mention.
Right, of course. Yes, Zepbound, yes.
While I have you, I got to ask you about this bidding war that we just saw from Metsera, which Pfizer has now won and triumphed over Novo Nordisk. How big a deal was that for Pfizer to get that, and how much of it is a big deal for Novo to not have gotten it?
So a few things there. One, I think, it's a great value for Pfizer. I think they're paying upwards of $7.2 billion in cash up front. Then there's the CVR. So it's, really good value for these assets, especially if they're able to, be a real player in the obesity market by the end of the decade. In terms of, the Novo side of things, you going with an unsolicited bid above kind of, a deal that's already starting to be consummated, that's pretty aggressive. And you have to really know what you're doing. And I think once I saw the FTC letter last week, basically firing some proverbial warning shots against Novo Nordisk and Metsera, I was very cautious because it was clear that the FTC was concerned around some kind of regulatory review ahead of a merger. So long way of saying, there were likely going to be some real regulatory issues. And I think for Metsera shareholders, they are in better hands with Pfizer. Novo has a lot to figure out. They need to, figure out their new strategy. They have a new CEO, new board coming on as of Friday. There's an extraordinary, board election. So I want them to focus on fixing some of the stuff internally while doing BD, but maybe not being so reckless and aggressive with something like the Metsera situation.
Yeah, maybe get the house in order first, as you say. Evan, great to see you as always. Thanks so much.
Thank you for having me.
And be sure to tune in this Thursday, November 13th. We'll be talking to Pfizer CEO Albert Bourla, fresh off that $10 billion battle for weight loss drug maker Metsera. He will be at Yahoo Finance Invest alongside a lot of other great folks who we're speaking to. It starts at 8 a.m. Eastern from our New York studios. We've got a special full day of live global coverage of the key themes driving the market: AI, crypto, the economy, much more. You don't want to miss that. Let's switch gears now and talk about the space investing landscape. Rocket Lab shares are trading higher. That's a day after the company posted third quarter results that beat expectations. It also announced a delay in the launch of its first reusable Neutron rocket as it tries to compete with SpaceX. Joining me now, Andrew Chanin, Procure AM co-founder and CEO and manager of the UFO ETF, which tracks these space stocks. Andrew, good to see you.
Thanks for having me.
So let's talk about the sort of balance here with Rocket Lab, because they keep being very, very patient on Neutron. At the same time, the core business seems to be, sort of chugging along. How are you thinking about that sort of balance?
Yeah, so people are excited about the backlog that they've been able to continue to build. There's been some happy customers, not just in the U.S. but also abroad for this company. And over the last 2 years or so, the company has also been on an M&A kind of strategy as well. So not just launch, but what else can we do for potential clients? So looking at building out satellites or satellite capabilities for clients as well has allowed them to hopefully weather different types of storms, because many space companies, some are just focused on government. And if the government's not there to spend, that's a huge issue. But for a company that's able to continue to diversify, it puts them in a pretty interesting position where right now they do have a functioning rocket where they can send customer payloads to space with Electron, but also looking forward to Neutron, where they can start hopefully winning some even larger contracts due to the larger payload that this rocket will hopefully be able to provide for customers.
And the company's revenue, which as we're showing on screen, was a record, was also up by 48% because of Electron, because of sending all those satellites into space. But let's talk about Neutron a little bit here. Is it a concern for you that they're delaying it again?
Part of it is you need to make sure that when you're sending things to space that you know what you're doing and that you're doing it safely. And having a failure at launch can be an expensive proposal as well, and can also set you back, while at the same time you can glean different insights as well. Now, Rocket Lab is seemingly taking an approach where they want to figure out these potential problems before they launch. And so it sounds like this is now getting pushed out to maybe sometime mid-time next year. They're going to start shipping the components that they need over to Virginia to the launch pad in Q1. But the first launch will be without a payload and not to land as well. The second attempt, they're hoping to be able to land the rocket. So this could continue to get pushed out, but at the same time, the company believes that they've got the balance sheet to continue this, and they see this as the future, and not necessarily completely replacing everything that they've done before, but being able to also provide, again, diversified types of launch for different types of clients. So it's something that I think people are excited about as far as investors in the company, because they think that these larger contracts will help put the company in an even more rarefied air as far as competition goes. But it's something that doesn't necessarily need to happen today, because the company is showing a strong success and track record, and they're bordering on setting a new record for launch this year.
Yeah, and the stock has also done very well. It's just about doubled this year. I'm looking at the returns for the UFO ETF. It's up almost 50% this year. There is a rather large divergence between some of the best performing stocks in your ETF, like a Rocket Lab or Viasat, which is one of the best or the best performer in that, and some of the stocks that have done quite poorly. And so, as you look at the sort of space landscape here, how do you think about how to deploy the capital, and who do you think are going to continue to be the best performers?
So I'm glad you mentioned those names. There are also many other names across the space industry that weren't necessarily household names, even 2 years ago, that have seen some pretty interesting runs during that time period. So names like AST Space Mobile, EchoStar, and then even looking out in Europe, a company like Avio, which specializes in launch for the European market. These are names that most people had not been familiar with, and maybe to this day still aren't familiar with. But I think one of the beauties of the ETF is this diversification aspect, where you can invest in a fund and get access to multiple companies, and not just US-based companies, companies from around the world that are specializing in all different aspects of the space economy. And so, if you're trying to pick individual names, you might have missed out on some of those runs, like those names that we just mentioned. And certainly not every company is going to perform in lockstep with each other. I think one of the beauties of when we moved forward with UFO and we're analyzing the different indexes that were available was that there wasn't a huge correlation with other funds out there. Even with the aerospace and defense funds, this had a different correlation. Even other funds that look to track space companies, we have significantly different holdings. So I think what's beautiful about UFO is that you're getting this global instant diversification to numerous types of companies. Not every company will be the best performing in the industry, but hopefully you'll be able to get a mix of that and be able to balance your space exposure.
Andrew, good to see you. Thank you very much.
Thank you.
Coming up, some of today's top trending tickers, plus why CoreWeave is getting a downgrade after its latest results. We'll be right back.
Welcome back to Yahoo Finance. I'm Brooke Tamamo. We're live at the NASDAQ here in Times Square. Let's turn now to some of today's top analyst calls on Wall Street. We're watching shares of CoreWeave, Estée Lauder, and RealReal. First up, let's take a look at the stock CoreWeave. That stock falling today after stronger than expected quarterly results were offset by a weaker than expected annual sales forecast. That's due to supply constraints. Now, on its earnings call, the CEO pointed to a third-party data center developer that's behind schedule, causing temporary delays. But that caused some Wall Street analysts to temper their expectations near term with multiple price target cuts. Mizzou Securities cut its price target on CoreWeave to 120 from 150. Melius cut its price target to 140, down from 165. While Bank of America cut its price target to 140, down from 168. Now, JP Morgan also cut its rating on the stock to neutral from overweight. The average 12-month price target is still at 137. Next up, we're taking a look at shares of Estée Lauder. Argus Research raised its rating on the beauty company to buy from hold, citing the return to revenue growth and improving margins. Now, the firm also said that new management increased innovation significantly, and it's entering new channels like Amazon Premium Beauty, Sephora, and Ulta. Year to date, this stock has had quite the run. It's up about 20%. Last up, we're taking a look at the RealReal. That stock soaring today, up around 30%, hitting its highest level since December of 2021. The online marketplace for luxury goods raised its revenue forecast for the year, and that led UBS, B. Riley Securities, and BTIG to raise their price target on the stock. The average 12-month price target is currently at $15. There are now 7 buys on the street and 2 holds. Keep it right here on Yahoo Finance. We'll be tracking all the latest market moves and top calls throughout the session.
Now time for some of today's trending tickers. We're watching SoFi, C3 AI, and Intel. First up, we got SoFi, the fintech company rolling out crypto trading to retail customers. SoFi is the first of several national banks planning similar moves in the coming months. SoFi previously gave customers the ability to buy, sell, and hold crypto through its app, but it agreed to shutter that service 2 years ago to obtain approval for its national banking license. Starting today, select retail customers can again trade Bitcoin, Ether, and other crypto assets. The shares little changed. Next up, C3 AI. Reuters reporting the software provider is exploring a potential sale, among other options. That sale comes as founders Thomas Siebel stepped down as CEO amid health concerns. The sales process is in its early stages, and other options are on the table, including raising funds from private investors. That is according to Reuters. Finally, we've got Intel. The company's chief technology and AI officer has left Intel for OpenAI. According to a statement, the company's CEO, Lip-Bu Tan, will take over the now vacant role. Intel says AI remains one of its highest strategic priorities. The chipmaker has struggled to field products capable of competing with the market leader, Nvidia. As always, you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Coming up, how to play the auto sector. We've got some top picks next on Market Catalysts.
The auto sector is at a crossroads. Tariffs, pricing pressure, and a sharp pullback in EV ambitions are reshaping how Wall Street is looking at the space. We're navigating how to play the auto sector with the Yahoo Finance playbook. And joining me now, we got Brian Sponheimer, portfolio manager at Gabelli Funds. Brian, it is good to see you. So maybe start high level, Brian. We're coming out of earnings season, a lot of big trends and themes to talk about. One, of course, will be with tariffs. And maybe we'll start there because you know, Brian, how automakers have largely, you say, been able to absorb tariff impact. How have they been able to do that, Brian? How have they been navigating that dynamic? And do you see that continuing, Brian? How sustainable is that?
Yeah, thank you for having me on. I think it was really interesting coming out of earnings season to see the automakers, largely speaking, be able to say to investors that yes, we've been through this first round of tariff hits, really starting in the second quarter and going into the third, where through supply chain mitigation, along with streamlining that's been taking place over the course of the last decade, they were really able to absorb costs and not push those prices on to consumers. Now, as we're looking towards the back end of the year, where for vehicles that are made in the USA, you're going to get the added benefit of getting the MSRP rebate for what was actually built here. And I think that you're going to see the automakers continue to talk about their ability to be resilient, their ability to handle really anything that comes their way. This is an industry that has really never been without some sort of complication on a yearly basis. So they're able to handle the punches that come their way pretty well.
Brian, who's relatively better positioned to navigate that tariff dynamic between Ford and GM?
That's a really good question. I think they're both fairly well positioned. Ford clearly has more of their production in the United States. I think when you look at their product portfolio, it really lends itself to being best suited to handle this really well. And on the other hand, they're dealing with the Novelis fire that is going to bite into fourth quarter production for the F-150. So they've got some near-term headwinds as it relates to some of their production efforts. But I think both are fairly well situated, certainly relative to peers.
Brian, let's talk about that EV trend as well. You talk about how automakers pulling back plans, to electrify their portfolios. Why is that happening, Brian? And do you see that continuing as a trend and theme here in the U.S.?
Yeah, I think in the U.S., the consumer just we saw early adoption on with Tesla, and I think those that largely wanted to buy an electric vehicle did so. And now we're coming on second generation buyers of those vehicles, and you're just not seeing that real lift up in the marketplace. And I think what's going to be really interesting as we get into the fourth quarter here is to find out really what the natural appetite for these vehicles is without the $7,500 federal tax credit that consumers would get. And so, we'll see what happens in November here, but we already saw in October where EV sales as a percentage of the total sales in the U.S. Really fell backwards in a material way. I would likely see that the ramp for EVs is going to happen. It's just going to take quite a long time, and we're seeing that reflected in some of the CapEx plans by the automakers.
Finally, Brian, quickly, I just want to get some names you do like. Tickers DAN, GTX, and APTV. Is there a common theme or themes to those names, Brian?
I think that the themes are they're automotive suppliers that have or are going to go through some financial engineering as it relates to Dana or Garrett or Aptiv. Dana's in the process. Dana makes driveline products for some of the vehicles that you were speaking to before on light truck and SUV platforms, along within the commercial vehicle world. And they're selling their off-highway business to Allison Transmission for $2.7 billion. Garrett is one of the world's largest maker of turbochargers. So we talk about the EV trend and the extension of the internal combustion engine. That's a really interesting company and a very profitable one, particularly given its market cap. And then Aptiv, which is going to have an investor day here in the next week or so, is in the process of spinning off its wire harness, electrical distribution systems business. And so there's an opportunity there to see what sort of growth profile the RemainCo will have. And at around 82.50 or so, I think it's a really interesting idea given current valuation.
Brian, appreciate your time and those picks. Thank you, sir.
Thank you for having me.
Every day we get a motorcycle in the office. So Ducati is starting a new chapter as the company launches its first off-road racing program in North America. And our senior autos reporter, Pras Subramanian, is talking to Jason Chinnick, Ducati North America CEO, about what this means for the iconic brand. Pras?
Yeah, Julie, you said new chapter, almost a new book here, entering the space of off-road for the first time with Ducati. Jason, thanks again for joining us. This is the new bike, the new off-road bike here. Talk to me about off-road business and why it's such a big deal for the company.
This is a really exciting opportunity for us because I myself was an off-road enthusiast. I grew up riding dirt bikes when I was a kid. And one of the things when we were looking at how we expand the Ducati brand, there's always a danger to expand it into places that are unnatural. But when you look at off-road, the first level of off-road for a lot of people is competition, and that's something that we're known for. So we saw this as an opportunity to bring a lot of the expertise that we know from a professional and racing level to the clients, to the market, but in a package that actually reaches out to a whole new group of people. And there was something that I was talking about a little bit earlier about really the heart to the American motorcyclist. It's typically not what we think. Most people in the U.S., their first experience on a motorcycle is on a dirt bike. And what better way for us to connect with those memories and actually create new ones as well.
So a whole new space for the company in that product space, but also, Ducati's sort of product portfolio has been expanding more and more and more. The company is mostly known for, Trinity and the Matrix riding around on a sport bike. Talk to me about the strategy about expanding the portfolio, but also how do you not dilute the brand by doing so?
So in terms of our expansion, it's been undoubtedly the largest expansion that we've had as a company in the history that I've been working with Ducati. In fact, this next year, we have 12 new models coming out. A lot of them were announced or unveiled at EICMA. Some of them even teased, which is the big motorcycle show that was in Milan last week. But the way that we stay true to ourselves is we actually always respect our core values, which are style, sophistication, and performance. And we also stick true to our mission. And ultimately, our mission is to basically bring two-wheeled experiences to people's lives and to enrich their lives through motorcycling. This is not transportation. This is entertainment. This is what we do with our free time and fun.
Ducati is known as a lifestyle, potentially even a luxury brand, if you will, because the prices are at that level. We talk about tariffs in this country. There's a deal in place with the EU. Has that helped things? Are prices still rising for Ducati in the US, or is there stabilization there?
We've definitely seen some stabilization, and there's no doubt that the tariffs did definitely have some impact on us. There's no way for us to navigate around that. But we've actually found some clever ways with the intention of trying to minimize the impact on the market itself. Because at the end of the day, we also understand the importance of the US market as well. So, when we look at this, we look at the impact that tariffs have, like I said, inevitably there will be some price increases that will happen, but it's stabilized for us because at least I think now we understand what we're playing with. And that has been the biggest challenge over the last, 6 months or so, is that every week that we would wake up, it would be something new for us to learn. And actually, we're still learning as we're going, but I think we're pretty confident in our approach that we have right now.
You mentioned the U.S. market, and only a few years ago we had the pandemic and a boom in outdoor activities, motorcycle riding being one of them. Are you seeing that wave still kind of take off here in the States? Is there any kind of come down there?
We've actually seen a stabilization, if not a slight decline, in the overall motorcycle industry in the course of the last 2 years. It's, in fact, I was just looking at the data this morning, and we see the motorcycle business is down about 3%. The good thing for us is because we position ourselves as kind of this ultra premium brand, we're a little less susceptible to, let's say, the changes that happen in fluctuations in the market, and a bit of a smaller player. So this year we've actually gained both market share and volume. There's no doubt that the product itself is a big driver of that, but it's also how we choose to position our brand and also being an aspirational brand. Despite the fact that, yes, prices have gone up, we always maintain that positioning where people want to be a part of what we're doing, because not only do we love it, and we're motorcyclists ourselves, but they want to gravitate towards things that they enjoy.
You mentioned 3%. Is that for the industry, or is that for Ducati in particular?
That's for our relevant industry. So when I say relevant industry, we don't build big cruisers, baggers, and scooters, and so we just try to measure the things that we actually compete against.
I want to talk to you about, it's Veterans Day today. You're also a veteran. Thank you for your service with the Army. What did that sort of experience for you? I know we're pivoting hard here, but what did that experience mean for you? A lot of bikes in the military, by the way. What did that mean for you in terms of taking what you learned there and applying it to the business world?
I was very fortunate. I joined the Army right out of high school. Was fortunate to serve in Germany as a tank pilot during the reunification of Germany, what was soon to be the European drawdown, and then Desert Storm. And I have to say, all of those experiences that I had in a very short period of time undoubtedly shaped the person I am today. I've been driven, I'm dedicated to what I do, I understand the importance of teamwork. That's just a little bit of it, but I have so much respect for not only that time that I had and the people that I served with, but also the people that are serving today. You know, my hat goes off to all of them all of the time, and I'm proud to be part of that unit, that camaraderie that we have being a veteran.
And it's really cool stuff with a lot of veterans in the workforce today and doing a number of different things besides stuff like driving tanks. So Jason Chudnik, thanks so much for joining us. Back over to you, Julie.
Thank you so much, Jason and Pras. Appreciate it. That does it for Market Catalyst. I'm Julie Hyman. Thanks for watching. We've got more Yahoo Finance coming your way next.